Welcome to the online lecture on enterprise systems. These are management information systems that affect a huge portion of the enterprise, or sometimes even the entire organization. These systems are extremely complex, but become extremely important as well. And we'll talk about why and different types of enterprise systems today in a few different segments. Now, on the administrative side of things, I want to remind you about the database project. So it's not due yet, but the due date is coming up. It will be after the break, and so please make sure to work on the database project and get the help that you need. Also, I want to remind you that the next class will also be an online class where we'll talk about analytics, business intelligence, and also a little bit about data mining. All right, so the first type of enterprise system that we want to talk about is called a transaction processing system, or TPS sometimes the acronym is. Transaction processing systems are those that, as the slide says, monitor, collect, store, and process data generated from transactions. So these aren't necessarily financial transactions, even though many transaction processing systems are dealing with financial transactions. But it can be all sorts of different transactions where we're processing some regular or fixed payment. It could be something with things like processing payroll. It could be with processing ticketing. It could be processing reservations, and it could be financial transactions in a normal retail location. So there's two main types of transaction processing that are done. One is called batch, and one is called online. So I want you to think to yourself, what type of processing do I do when I study for a particular exam? Am I a type of student that after every single lecture, every single class, I go and I review my notes, I take any additional notes that I need to, and I've pretty much got that lecture's materials ready, and so by the time the exam shows up, I don't really need to do any additional studying because I've already done it along the way? If so, that's kind of in an online processing of studying, or real-time processing. Or are you a student who kind of puts off the studying until right before the exam and then do all of your studying all at once? That's more of a batch processing. So as an example, many retail transactions, payment transactions for goods or services, tend to be done in real time or online transactions, whereas some types of transactions don't need to be done immediately and oftentimes get batched so that they're done all in one go. For example, things like payroll or sending out tax forms for payroll or things like that don't really need to be done very often or even all the time, and they can be they can wait and be run at one huge batch. So the very first transaction processing system is actually quite old at this point. It has a really cool acronym, SABRE, but a really terrible name. Stands for Semi-Autonomous Business Research Environment. It was created by IBM in the early 60s, and it was kind of the showcase for IBM's mainframes, which we've already talked about. So this is a system that was created for American Airlines, and then later it was used external to the company, and they allowed it to be used by travel agents, and then it's further expanded for that. So even 4 years after its initial inception, when it was first created, it was already handling over 7,500 reservations per hour, which for the 1960s is an exceptional amount of transactions. And at its highest, the original SABRE system processed about 42,000 transactions per second, which is quite a few transactions. Now, SABRE's been spun off, it's slightly changed over time, but the basic ideas behind SABRE and even the part of the system still remain and still run some of the online booking for airlines such as Travelocity and Expedia. So here's a picture of how it used to work, kind of as SABRE was coming online. These are individuals working for American Airlines who were taking transactions for reservations. And you can see that the filing system is not electronic at all. Here is the control panel for the mainframe and one of the operators working on it. This is a representative for American Airlines who was taking the the transactions, the reservations, and applying them. This device is a very clever little one that predates the internet, but would allow the agent here to enter the transaction into the mainframe. So that's Sabre. Let's now talk about some properties of transactions. And we kind of hinted at this when we're talking about databases, but we never really got into this. There are four really important properties of transactions. They're called ACID for an acronym. And being ACID compliant means that that your system conforms to all of these properties. So the first is atomicity. So we've talked about this a little bit already, but atomicity is the idea that if the transaction is an entire unit, if any aspect of it fails, then the whole thing fails. All right. So for example, if I'm trying to take money out of an ATM machine, if the ATM machine does not actually give me the money out, should my account have a reduced balance on it? Well, it shouldn't, right? If the money's not dispensed, then my account shouldn't have any problems. Or what happens if I go to purchase something and there's a power outage and the server goes down and the product is never shipped to me, even though I'm charged for it? Is that okay? Well, it shouldn't be, right? And so atomicity is the idea that if something fails along the way, if there's a problem in any way, the whole transaction is rolled back as if it didn't exist. So that's atomicity. Consistency means that there may be rules, business rules, imposed on the database that need to be, then the data needs to conform to those business rules both before and after the transaction is processed. So what I mean by this is, let's say that I am a business and I only allow customers to have $500 worth of goods purchased on credit. Okay, there's a credit limit on customers. And let's say that I have a customer who comes in who has a balance of $450 on credit that hasn't been paid. Would they be allowed to come and purchase $100 worth of goods in my store on credit? Well, the answer is this transaction shouldn't be processed because it would mean that the overall amount on credit would be $550, which breaks our business rule, breaks that integrity constraint that we have put in as a rule, and so that would break the principle of consistency. The third is isolation. So isolation, we've talked about this before also. Isolation is the idea that concurrent transactions, meaning those that happen simultaneously, need to have the same results as if they were happened one after the other serially. And so I've given the example before of what happens if my wife and I try to take money out of two different ATMs across town at the exact same millisecond. Well, what should happen is that the transaction should be processed so that they act as if they occur one after the other. Most databases and transaction processing systems use a series of locks in order to make that happen. And so internally, they lock certain things so that one of the transactions has to wait until the other is finally completed. And then the last of the transaction properties in ACID is durability. Durability means that if a transaction does fully complete, it doesn't need to be rolled back because of problems, then it should be stored. So if there needs to be backups, if there needs to be, any, redundancy in order to make sure that the transaction is stored, it should be there. I shouldn't be able to go and, well, maybe it would be nice for me, but it wouldn't be nice if the bank, if I took money out of the ATM and then the ATM's power went out or crashed, and then all of a sudden that information wasn't stored on their server and taken money out of my account. And so durability is that idea that the transaction persists even if there is a problem. All right, so I want you to pause for just a second and think, maybe you've experienced this in jobs or internships, maybe you've experienced it in some of your classes, but think about what types of management information systems, technologies, are used exclusively in your functional area. So what are the sort of vertical market applications that are used in your area? And maybe if you don't know them, have a look online. See if you can figure out, what types of, accounting software, if you're an accountant, or financial software, if you're a finance concentration, or etc. If you're international business, are there any types of MIS that are exclusive to yours? All right. So pause and think about that. All right, so one of the things that enterprise systems are purported to do is to break down organizational silos. It's kind of one of the big arguments for enterprise systems. And so let's talk briefly about what the heck organizational silos are and why they would need to be broken down. So as you can see in the image, a silo, these are grain silos where harvested goods are stored so that they can be used in the future. And you'll notice that these various silos are independent of each other, right? You can't walk from one to the other or transfer materials from one to the other very easily. And so conceptually, how this applies to organizations is that it's very common for the different concentration areas that we have, the different organizational groups, things like marketing and accounting and operations and MIS and et cetera, it's very common for those groups to just kind of work as a small group and interact with the other groups minimally. All right. For example, the marketers, do they go and collaborate with the accounting group very often? Well, in some organizations that doesn't happen. Where does the MIS group get put? Well, usually down in the basement. Do they interact with the other groups? Well, not as often as perhaps they should. So the challenge with this is that when organizations have these silos where people work kind of semi-independently, is that we have issues. All right, we have a lot of issues potentially with the data, and in information systems we care very much about that. Sometimes we have different groups that duplicate work, and duplicate data, and that's a real problem for us. Sometimes we have information that is inconsistent across different groups. And so, maybe the marketers have been in contact with customers more recently than some of the other groups. And so maybe the information that they have in one of their systems is more up to date and inconsistent with what the accountants have, or, for billing purposes and other things. And that can be problematic. It's also problematic. We've talked about collaboration. There are real benefits to working with others who are different than you. And so when we have silos, we exchange information on a very limited basis or not at all. And that's problematic. We don't get the benefit of working together and collaborating. So one of the main things that enterprise systems do is they break down these silos by forcing, to some extent, the databases to be integrated into one big system or a few big systems. We'll talk next about a type of system called an ERP system. And ERP systems are supposed to be centralized databases that cross the organization. Now, these systems can also help us to integrate our business processes. We'll talk about that in a minute. All right, so enterprise resource planning systems, or ERP systems, these are the systems that we typically think of first when we're talking about enterprise systems. So these are systems that include operations, include HR oftentimes, include finance, include accounting, accounts payable and receivables, including sales and order processes, and others. All right, and so the systems, these huge systems, enormous systems, have centralized databases. The data is integrated together, and so all of the different business units, the different concentrations, the different functional areas, use the same systems. Now, this isn't always the case, but that's the idea. So why would you want to do this? Well, hopefully, having these things centralized will take care of the problems that we just discussed of duplication of work and inconsistency of data. Hopefully, it will also allow for additional flexibility and agility. Because we standardize processes and standardize our data, which is one of the potential benefits, we free up that extra time of doing duplicate work to focus on things that are more flexible and agile. Hopefully, these enterprise systems also help us to lead to better decisions and increasing our efficiency. Now, that isn't always the case, and it isn't always the case in the initial time. Anytime we're first implementing a system, we'll talk more about this later when we talk about systems development, but anytime we first implement a system, we usually have a productivity decrease. And then we hope over time that as people get used to the system and we, actually optimize our business processes, that our overall productivity is higher than before we implemented the system. So we've got to be careful on that. Enterprise systems, one of the main selling points is that they can decrease costs, again, through the idea of standardization. But also, the last item is pretty interesting, that many of the ERP vendors sell themselves on the fact that they go and study best practices from industry for various different business processes. And then they incorporate those best practice business processes into their software so that, when companies adopt these systems, oftentimes they can say, oh, well, our process maybe wasn't the same as the system, but the systems is actually a little more efficient, and it's the way that industry is identified as best practice. So that can help us decrease costs and make us more efficient. And then the last item I want to talk about is the second from last, the modularity. Another nice thing about enterprise systems is that you can purchase different pieces of an overall enterprise system. For example, if you are not a manufacturing organization, maybe you don't purchase the modules that deal with manufacturing. Or maybe you're a specialized industry like a university. Maybe you would purchase the registration system module for your enterprise system, much like our university has done. And so, these systems, although they're enormous, they do have different modules that can be added and configured so that, can meet the needs of many different types of businesses. So here's an example of some of the basic functions that most ERP systems have, depending on your industry. So finance, accounting, including general ledger, accounts payable, sales and marketing, order processing. If you're a manufacturing organization, there's inventory and shipping and production planning modules. And for many organizations, we'll also use an HR enterprise system. So here we have a discussion of when we decide to get an enterprise system, how do we implement it? And this is kind of a debate. We have to think about this. What is best for our company? So do you purchase a system that is what we call a plain vanilla ERP system, which means that these millions of dollars systems, so we say, hey, SAP, come and purchase an ERP system for us, and it'll take us a year or 2 or 3, and it'll take us, a few $1,000,000 in order to implement or more, but we're not going to really do very much customization. We're just going to go with the system plain as it is. Well, what's the advantage of that? Well, it's a lot simpler, and it is less time-consuming to implement a kind of off-the-shelf system of ERP. We get most of the advantages of an enterprise system, the centralized database and the standardized processes. But here's the problem. What if our business processes don't align with that plain vanilla system? Well, they're supposed to be best practice, but what happens if we have business processes that are our company's competitive advantage? Should we change our best competitive advantage so that it matches up with the new system? Maybe not. On the flip side of that is we have the ability to customize our ERP system. Now, the advantage of this is it gets us exactly what we need in terms of meeting our current business processes and our organizational needs. But what if those aren't very efficient? And whenever we customize something, it all of a sudden takes way more time to implement and is much more costly. And also, when it comes time to upgrade our enterprise system, it's more difficult to upgrade because we may not be able to upgrade without doing additional customization. And so, what should we do? Should we do plain vanilla or customized? Well, it really depends. What most organizations end up doing is they end up doing as close to plain vanilla as possible and customize a few aspects of their enterprise system to meet certain specific business processes that they have. But it's mostly plain vanilla. But it varies from organization to organization. Customization is much more risky. All right, so I mentioned that SAP is the largest ERP vendor. This data is a couple years old, but it's still fairly close. Microsoft has been making some fairly decent gains in the enterprise space in the last little bit. They probably have gone up just a tick or two, but SAP is the largest provider. Oracle with their PeopleSoft product is next, and then there's ones that are a little more specialized. Sage and Infor and Kronos, those Concur, those tend to be a little industry specific. Microsoft's also kind of a general one, but SAP is kind of the big ERP player. So what is SAP? SAP is an old software company, founded in 1972, one of the largest software companies in the world. It actually is, to my knowledge, the largest software company in the world that doesn't have its headquarters in the United States. It's a German-based company, and they are by far the leader in enterprise systems. We've talked about this. Interestingly, though, enterprise systems are not actually the largest portion of their business now. It's actually a fairly small portion of their business because enterprise systems have become a fairly mature, ERP systems at least, have become a fairly mature and stable industry, and SAP is starting to look at other growth industries and has products in databases and in analytics and in other things as well. All right, so here's some sample exam questions that hopefully you'll be able to answer by now. What does it mean for an ERP system to be inflexible? We talked about that in terms of business processes. What are some of the pros and cons of changing your organization's business processes to align with the procedures in an ERP system? Well, hopefully you'll understand what the difference between customized and plain vanilla are, and what are the pros and cons of doing that. And why would you want to implement an ERP in an organization? Well, there are some definite benefits to that, and the standardization, the ability to be more efficient and more effective in decision making, more flexible, and not focusing on or not having some of the disadvantages or some of the pros of implementing an ERP system. Some of the cons are, well, it's just very, very expensive, time consuming, and it can force you to change what your organization is doing as far as business processes are concerned. All right, let's talk next about customer relationship management systems, or CRM systems. This is another type of enterprise system. So we've talked about transaction processing systems, ERP systems, which tend to be quite general. Now we're going to focus on customer relationship management systems, which tend to be focused more in the marketing function. So historically, sales and retail operations tended to be very personal, right? You knew the people who worked at the local store, right? How, as an organization, then, do you make it so that as stores become, big box warehouses and shopping turns more and more online, how do you, as an organization, keep the personal and customized and friendly experience that people used to have shopping when you're not in the same room as them? How do you manage that? Well, generally, many organizations do it poorly, but CRM systems are designed to personalize as much as possible and track a customer relationship with a particular entity. So, why CRM? Well, sometimes we have dissatisfied or unhappy customers. We also want to make sure that we retain our existing customers. We want to make sure that we know how to target and recruit new customers. We have to think about things like our pricing structure and our cost of producing goods or services. And then we have analytical decisions like, should we retain our bad customers? Or should we allow them to churn or go away and not be our customers anymore? These are sort of decisions that we can try to answer with CRM systems. So the goals of CRM are again to fix some of those issues. Okay, have a personalized relationship with the customer, and in particular have a individualized relationship with the customer. CRM systems track all of the interactions that the company has with the customer, at least as much as possible. And so if the customer calls up and complains about something, there should be a record of that. If they've received a digital marketing communication, there should be a record of that. And so based off of that, based off of their purchase behavior, individualized help and individualized targeting and marketing can be applied to a particular customer. Related to that is we should also know quite a bit about the customer in terms of when they were acquired as a customer, what their various relationship is, and if they stopped being our customer, came back as a customer, and what happened with that. So overall, our goal is to generate new customers, keep profitable customers, and then maximize our revenue from each of the customers. So here's kind of a visual example of what we're trying to talk about. In the outer bubble, we have our target population. Okay, this could be many different populations, but this is a population that we've targeted. And within that target population, a smaller subset is our customers. Okay, not everyone's our customer, and that's normal. But within that segment, or within that group, we also have our repeat customers, okay, those that have come back to us again and again. And then within that, we have our highest value customers. These are our customers that give us the biggest portion of either our revenue or in particular our profits. Those that purchase the highest margin products or purchase the largest quantity of products. And so CRM systems are to help us to identify these groups, but also in particular help us to move individuals from the targeted population to our customers, to repeat customers, to our high value customers, and also manage our churn when people stop being our customers. So CRM systems can kind of have either two different types or two different functionalities. We can think of CRM systems in terms of the operational functionalities, things like how do we manage sales, how do we do our marketing operations, how do we do support for our products and services. Or we can look at it from a sort of an analytics perspective. Now we'll talk more about this next class, but CRM systems often support things like data mining and decision support, allow us to look at the data after all of those operational things have happened and try to figure out what we want to do in the future. So, market leader in CRM systems is by far Salesforce. Salesforce has been ranked as the most innovative company a number of different times in the last few years. They do $3-ish billion in revenue. And they are a very interesting company because they're entirely based off of cloud computing. So you don't install Salesforce, you just sign up for an account, and the software is run completely over the internet on their servers in a data center somewhere, and you just access it through a browser. So they are a company that's called a software as a service company, SaaS, that is all cloud computing. They're also moving into other markets as well. So as a sample exam question, what's the purpose of CRM, and how do CRM systems help perform CRM? You should be able to answer those questions now, so if you need to pause and look back, go ahead and try to answer those. All right, our next type of enterprise system is a supply chain management system, or sometimes referred to as an SCM system. So if you've taken the supply chain management class, and learned about OPM information, here's a basic graphic that shows a supply chain. So on the top, we've got raw materials that are supplied to a particular supplier. That raw material supplier then sends those raw materials to some sort of manufacturing organization where something is created. Once it's created, it is distributed to a distributor, and then that is then either delivered to the customer or to another distributor sometimes, and then that particular customer who buys from the manufacturer then sells to the end consumer. That's a very typical supply chain for goods. the bottom also lists information about a supply chain in kind of a more linear form. So supply chains are very complex nowadays, and even more complex than this. The general idea, though, is that with supply chain management systems, we want to reduce some of the problems along the way with these supply chains and increase our overall efficiency. So how do we do that? In fact, that's what the slide says. We've got here our goals: reduce the issues and increase our efficiency. And so we do that through planning, forecasting, organizing our various activities, and hopefully optimizing them, okay, making them as efficient as possible along the supply chain. Whether we are a piece of the supply chain or whether we control multiple aspects of the entire supply chain. So many big companies, Apple Computers, for example, they try as much as possible to integrate their supply chains, meaning that they control most or all of their supply chain along the way. Most other companies don't do that. So what happens when our supply chain doesn't see optimization? Well, we might have problems with our products and need to throw them away or waste them. We might have to apply overtime to meet demand because we haven't planned properly, which is very expensive. If we've overproduced, we may have excess inventory, and inventory costs a ton of money to store and to keep safe and to keep so it's not stolen, and that's something that's not efficient. We may have poor quality products. We may still ship them, but they may not be very high quality. We may, through a number of things, either not meeting our obligations to our customers or not communicating well with our customers. We may have poor customer service. And then ultimately, all of this leads to loss of revenue because we're either not capturing the revenue that we need to or we're having to pay too many expenditures or too many expenses in order to produce and to keep our product. An example of this is something that's now referred to as the bullwhip effect. And some of you might have come across this before in an OPM class. Here's the idea of the bullwhip effect and also how a supply chain management system might influence that. So let's say that you are a small retail operation. And let's say all of a sudden you notice that one of your products is really, really popular. So popular that you think, I'm stocked out of this item. It's becoming really popular. Maybe this is the hit item. I'm going to need to place some additional orders with my distributor or with my wholesaler. And so they order a lot more product, and the wholesaler says, whoa, we've got a huge order for this product. We're going to run out, or maybe we already are stocked out. And then they end up placing a huge order with the manufacturer. And so this little change has kind of cascaded through the supply chain so that all of a sudden the manufacturer is now needing to produce more information or more goods. Well, back in the retail operation, what happens if the customer sales the next month are almost none? Well, all of a sudden the retailer says, well, we just made this huge order because we thought our product was going to be really hot and now no one's buying it. So let's just not order anymore. Well, then the wholesaler then says, oh, well, we thought the product was going to be really hot, and so we told the manufacturer to send us a whole bunch more, but now we're not getting orders from our customers, so let's not order any more from the manufacturer. We might even need to liquidate our inventory. And so then the manufacturer goes and says, oh my goodness, nobody's supplying products. We don't want to hold a ton of inventory. Let's cancel our production for now. And so what ends up happening, the bullwhip effect, is the idea that small changes in one portion of the supply chain, usually towards the end, towards the consumer, will lead to large variations further along the supply chain. So kind of like whipping a whip, a bullwhip. A small little change of the hand will whip a large change in the end of the whip. And so all of this can cause problems, okay? Because we have inefficiencies all along there due to not understanding the demand at the customer. So how does this help us? Well, if we were to apply supply chain management systems, and in particular, if we were to allow those systems to communicate with either our partners, or if we're one big organization with an integrated supply chain, with our different divisions, then we can avoid these problems, because communication would help. Because what happens if all of a sudden the retail operation was able to communicate all the way along the supply chain? Well, then forecasting would be better. It wouldn't be perfect. We'd still have some issues occasionally, but it would be much better. Now, one of the ways that we do this is through something called an interorganizational system. So as the name implies, these are information systems that go across or between different organizations. An example of this is something called vendor managed inventory. That uses a interorganizational system. We'll see this in another slide or so. Now, we also can use supply chain management systems to do better forecasting. Okay, as we have these systems and they track our production, our operations, and sales and things like that, when we line up these systems with data, then we can make better decisions as to how many items we need to produce in the future. Another thing we can do with these systems is it allows us to do innovations like just-in-time inventory, where we make products just in time of their need to be sold or to sell to our customers. And the systems, supply chain management systems, help us to do that by allowing us to be more efficient. So let's talk about these couple of examples. So Walmart and Procter & Gamble. Procter & Gamble, if you're not familiar with them, they're an Ohio-based company that makes a huge number of the products that are in a large retailer like a Walmart or a Target, etc. So Walmart has a very strong relationship with this company. Walmart, though, is large enough that they can say to Procter & Gamble and to most organizations out there, you know what? Organizing inventory is a big pain in the butt. What if we were to come up with an interorganizational system? We'll talk more about this in a few slides as well, where Procter & Gamble can't see Walmart's internal finances and they can't see a lot of their projections, but they can see the inventory levels of their own products, Procter & Gamble products, at the Walmart stores. Walmart can then say, you know what, you have access to inventory at our stores. You keep our stores supplied. All right, you're in charge of them. All right, so this is vendor managed inventory in Walmart through the use of an interorganizational system. So another example of this is with Dell. So Dell uses just-in-time inventory. If you want to be a supplier for Dell, okay, supplying computer chips or RAM or cases or plastic or whatever it happens to be that Dell needs in the manufacturing process. Dell's manufactured in Austin, Texas. So if you want to be one of their suppliers, you actually have to physically set up shop right outside of Dell's location. And when they need product, Dell says, hey, we've got an order, send it across the street to us. And so Dell essentially holds no inventory and uses these interorganizational systems with their close partners in order to just in time produce products and manage their inventory. And that's through a supply chain management system that's accomplished. Now, supply chain management systems might be a module or multiple modules of a traditional ERP system. It may be a separate system that is exclusively focused on supply chain. And it might also use something called EDI. All right, so EDI is an old technology. It's one that most people aren't even aware exists, called electronic data interchange. And EDI uses something called an extranet. Okay, an extranet's kind of like an interorganizational system, but it's actually the network component. Okay, so it's the network connection between different organizations. And so this is an example of collaboration, and we'll see how this works in the next picture a little bit. So it's a very simple picture, but hopefully it illustrates the point. In the center, we have our company, okay? And then on the left-hand side, we might have our employees, and they may need to, we've talked about VPN before, connect to our internal network through a technology called VPN, okay? That allows our employees to have the network resources that they need from our company's servers and things like that. We also, on the upper right-hand side, we may have our suppliers. So here's an example like the Walmart one, where our suppliers may be able to connect through this extranet with our internal databases over VPN or other technologies in order to connect. All right, and the other items I'm less concerned with at this point. But let's now talk about, that's an extranet. Let's talk about EDI, or electronic data interchange. So this is a standardized way of sharing certain specific types of documents, transactional documents, so that our business partners can trade with us basically to fulfill orders and inventory management, but it all happens electronically. Here's an example. This is an old picture from a different textbook. Here is a purchase order, or an example of a purchase order, without using EDI. Okay. Now, this varies a lot from organization to organization, and the clip art is a little atrocious and pixelated, but hopefully it illustrates the point. That on the left-hand side, we have a buyer, okay, and they may need to, somebody wants to place an order, and they may need to go talk to either accounting or purchasing or both, and then they actually need to create a purchase order, and that goes over to the mail room and gets delivered. And then at the seller, the purchase order is received, and we may need to communicate with sales, and then once that's processed through accounting and finance, we then need to get it ready for it to be picked from our warehouse and then shipped and fulfilled and then delivered back to the product to the customer, and they need to receive it and then put it in their inventory. And this is a very long process. Some people have estimated that just a simple purchase order, okay, which is a very simple document, hey, I want to buy so many of these, in order to fulfill that, it may cost an organization up to $25 in man hours, okay, person hours, in order to fulfill a purchase order. Whereas with EDI, and I'm less concerned about the exact details of this slide, and more the concept, with EDI, the buyer creates an EDI request, and that's standardized in a particular purchase order form, and that's through the use of a network, like an extranet, that's used to connect to the supplier, the seller, and the seller receives that, and that information instantly gets sent to the various systems it needs to, and then it is fulfilled and delivered, right? So we went from a process that might take, as much as $25 in human capital costs, and we've now switched it so that it's now a few cents. And so EDI is a way of communicating this. Walmart does most of its transactional information and inventory management through EDI. So what's good about this? Well, anytime humans are involved in the process, we have the likelihood of adding data entry errors, and those are bad. So EDI takes care of, not all, but most of that. EDI is much more secure. It tends to go over private lines, not even the internet, actually. It tends to go over more secure lines than that. It can do what we call reduce cycle times by, because this purchase order process takes a lot of time, people time, where EDI cuts out a lot of those steps and makes them electronic. It just makes the order process and other business processes speed up. It may be a small piece, but a piece of a green IT movement as we reduce paper and go towards an electronic office. And then hopefully, because of our increased efficiency, our customers are happier, they get their goods and services more quickly, and there's a clear and an easy to identify record of the transaction that's communicated through EDI. Costs a lot less money, and there's no, hey, did they actually order this particular product or this product? Because they didn't specify the product number, they just specified a name, and that corresponds to a couple of different products. No, with a very standardized format in EDI, there's no uncertainty there. It's just, the order is the order. All right, so that's supply chain management. And then, a few sample exam questions that hopefully you'll be able to understand now. What is supply chain management? How can MIS improve supply chain management? What's EDI and an extranet, and how do those help out with supply chain management? And the last piece, I already talked about this briefly with Salesforce, but I want to mention it again. So software as a service is a growing area and an important area of cloud computing. So the model here is, rather than install software on your computer or on a server that your company owns, it's actually installed and run on a server somewhere else in a data center, and it's completely managed by the company. So you use what we call a thin client, like a web browser, often it is a web browser, in order to access the software. This is somewhat akin to more of a rent versus buy model. So rather than purchasing enterprise software, you rent access to Salesforce and other software as a service model. But a lot of the vendors, ERP, CRM, SCM vendors, are starting to move to software as a service offering. And, this is a large industry. There's some this information is slightly out of date, but this is a 12 to $20 billion industry and a growing industry. So it's something to to keep in mind. Now, in terms of pros and cons, we have some of the same pros and cons to cloud in general. We've talked about this before: cheaper upfront costs, but it might be harder to switch in the future. It may be quick to implement things, but this may be harder to get out of a relationship if you need to. You're reliant on a network, and so if there's problems with network, that's an issue. But it's really nice because the software is scalable. You don't need to manage your own infrastructure in-house. Security tends to be good, even though it's potentially a con if someone else is managing your security. The real con, though, is you don't really get to customize your software as a service offering to any great extent. All right, so next class is actually also an online class. We'll be studying analytics, business intelligence, and data mining, so do the corresponding readings for that and make sure those get done. And also, as a reminder, work on the database project.